This is the Friday, November 23rd, 2018 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Delaney.
All right, Darin, we've got a lot of great Twitter questions and Facebook questions in this week. People must want to know your opinion on these things. So we're going to start off here with Richard. He said, when will we have chances to forward contract at higher prices early in 2019?
I think he answered his own question. In soybeans, probably the earliest in 2019. So I'm probably around January, possibly into February, and then it depends on how large is the South American crop and how much do they immediately turn into cash and start moving. On corn, I think we've got a little bit more room. I think, to me, as much as I detest the existence of the prospective plantings report, I think corn's fate could be sealed by the end of March if indeed USDA in its infinite wisdom comes out and adds 4 or 5 million acres to this year's total, so pushing us up to 93, 94 million acres in its March at the end of March report. So we may see a bit of an abbreviated opportunity to get some new crop on the books, at least initially, and then it's all going to turn to spring and summer weather. So soybeans up through December, maybe mid-January. Corn, I think you've got an opportunity up until the end of March. Or at least mid-March. That's going to be, I think, our best opportunities to get some new crop on the books.
Okay, I've got to go back here. We've got to get the Darin Newsom acreage estimate here because I don't think we have you on the show again until 2019. What are your estimates right now?
Same as they always are. No clue. I have no clue. I don't play the pin the tail on the donkey game. I'll leave that for everybody else. Will we see more corn? Yes, I think we will. It's going to be one heck of a round of game theory all winter long. Who's going to fall in line with everybody else, and if corn works better for the bottom line for most producers, then they're all going, then we're going to see this mad rush towards corn, and it's going to come away from soybeans. For those who say, okay, well, I'm going to buck that trend, and I'm going to plant soybeans, more soybeans than corn, then they're reliant on some sort of trade deal getting done between the United States and China. What's the likelihood of that? I think it's possible. If so, those folks are going to get paid off pretty well, or could get paid off pretty well. Personally, probably not going to make as much of an impact as what some like to talk about, but I think the opportunity is there. So, long story short, I think we're going to see more corn. I have no idea how much. Soybeans, I think, is going to lose most of the acres. Okay.
You've set me up here nicely for the next 2 social media questions when we're talking about trade deals. Scott in, I think it's Barrington, Illinois. Will we see, or can we come close to normal exports of beans to China if a deal is made in January?
No, we're too far behind. As we talked about on the program, we're running, right now we would project out 600 million bushels short of what USDA is projecting at this point, or guessing at this point what total demand is going to be. So even if we get done in January, that's towards the end of the U.S. normal best time to ship soybeans, from September up through January. We're going to be seeing South American soybeans coming on. So we would have missed, even if a deal is done in January, we would have missed the bulk of our shipping period. So I think we're going to run up short. I don't see any way that we're going to come up anywhere near USDA's projection of, 1.9 billion bushels or something like that. I think we're going to fall well short of it.
Can you give me an estimate for how short we're going to fall?
Right now, given the export numbers that we've seen through the first 25–30%, we were usually about 25–30% shipped by this point. I'm guessing about as bad as USDA, about 1.3 billion bushels would be the top, and that's going to continue to come down with each week that we run short. We'll come up with short numbers.
Okay. Next question. We've got Jared in Texahoma, Oklahoma. Darin, who will win the trade war? I know you've got an opinion on this.
Yeah. Well, if someone's opinion who I trust a great deal is Urban Lehner with DTN, still writes columns for DTN. I read his latest piece. And if the U.S. administration's game is to create long-term trade change in China, and that's it. They're not going to settle for anything less. There's no way China will ever agree to that. So given those hard-line terms, one would have to think China holds, in the end, China's going to win this thing because they just will not change. If somehow there is some sort of agreement reached, some sort of cooperation, then both sides could declare victory and come out ahead. I think that's the best case scenario from what I've seen so far with the talks. But what we see and what's actually going on are two different things. I would lean more towards the first scenario, which probably plays to China's favor.
All right. I'm gonna switch it up here, move away from that, because we had you optimistic on the show. So move away from that. Tell me what's going on in the cotton markets, Darin.
Cotton market's been struggling. We've seen a big sell-off in the December cotton contract. I keep thinking that we're down near an area where this thing should start to stabilize, and I think it could. It's just got to find some buyers. We just don't have a lot of demand for cotton right now.
Is it just because of China?
There it is again.
Okay.
I mean, it's just another one of those markets caught in this never-ending web of trade scuffles. And if we can't move it and we still have it, I mean, it's the same. We can talk about commodity after commodity after commodity. We can't move it. We've got plenty of it, so what do we do with it? And the price just goes down. And that's the situation cotton's been in right now. Again, I like where it's at. If it can hold in this area, I think we could start to see the market try to slowly climb up. But again, if we don't get any help from the cash side, from the demand side, it's probably not going to last all that long.
So hold at the 75-ish range?
In that range, yeah.
Okay.
Yeah.
Let's take a question here from Marty in Buxton, North Dakota. Brazil's current soybean crop is projected by the USDA at 120.5 million metric tons, plain and simple. But what are the real numbers floating around?
Again, no idea. I mean, USDA really never has a clue as to what the U.S. crop size is, so I really doubt if it knows what Brazil's crop size is. 120 is large. Could it be larger than that? Sure. Could be 121, 122. Could it be smaller? Yeah, but I don't, unless Mother Nature intervenes again, I think 120 at least is probably, as good a starting point as any. And then it just gets larger from there.
All right, Darin, we've got an interesting question. There's not a lot of context for it here. Roger in Kokomo, Indiana, you said you wanted to answer it. Sell or hold?
Yes.
That's your answer?
That's my answer.
Okay.
Yes. And it's true. It depends on what you've done up to this point. You got to look at what the market's telling you. And I know that drives people crazy, but it's telling you exactly what to do. In the soybeans, if you haven't hedged anything, you're probably going to want to sell it. If you have hedged it, you're going to want to hold it. In corn, it's not really telling you that it's going to pay you much more later on. So if you don't have anything hedged, maybe you want to, it's got a little bit more of a bullish situation right now. If you haven't got much hedged, you might want to hold it. Or if you do have it hedged and the spreads really aren't moving and basis is improving, you might want to sell it. So the answer is yes, but it all depends on what you've done up to this point. And that's really the situation every year.
If he wants specifics, he can just find you on Twitter.
Absolutely.
Yeah, there we go. All right. We've got one more Twitter question here from Phil in Dresden, Ontario at Agrodome on Twitter. How do we get from under 955 million plus bushels of soybean stocks? How many years is it going to take, or is there a butterfly fluttering around somewhere?
Well, the easiest way is for the normal erosion that we see in USDA's estimates. Over the last X number of years, I don't even remember how far it goes back, they've been off. At one point, it was up to almost by 67%. They were overestimating by about 67%. Now it's down, because of the last couple of years, down closer to only overestimating at its peak guess, overestimating by 50%. So just by erosion of their guesses, we could start to see that thing come back down below 900 million bushels, 800 million bushels. I think it's going to be more difficult to get that type of erosion this year because it usually falls back on they have no clue as to what production was or demand was. Well, here, they still might not know what production is, but I think demand is going to become very clear in the fact that we just don't have much. And so I think that's going to keep the erosion a little less than what we normally see. So could we pull back below the 900 million bushels just naturally? Yeah, I think we could. Is it still going to be a very cumbersome level by the time we get to next September's quarterly stocks number? Absolutely.
All right, Darin, we've got one more thing we've got to touch on here. I know you follow it, the oil markets are continuing to slide lower there. What's going on? Why are we seeing this happen?
Yeah, I get a great deal of pleasure watching people, pull their hair out wondering about the crude oil market and they can't figure it out. It's one of the most simple markets out there, and every signal out there is saying the crude oil is getting ready to go down. You've got contango carry, in the forward curve. The future spreads are saying we've got too much supply for demand. You've got technical signals both on the long-term monthly charts and the intermediate-term weekly charts that were saying the top was in this market, and seasonally the market tends to go down this time of year because demand slows down. Yes, we've got some holiday demand coming up. I guess there's supposed to be a lot of drivers out this year, but in the big picture, it doesn't really affect crude oil all that much. So what it's done is it's come down and it's pulled back and it's fallen down to support near its $55 range, which roughly a 50% retracement of its previous uptrend on the weekly and monthly charts. So it's done exactly what it was supposed to do. Right now we're in a long-term downtrend, so we get this bounce. Wouldn't be too surprising to see it come up a little bit just on a reaction, some headlines, these sorts of things, but then it'll go back down and spend most of the winter, I'm guessing, on the defensive.
Are we going to hold at this $55 range, or you mentioned before we started taping Market Plus here that February is usually kind of where it finishes its slide. If that's the case, should producers be waiting until February to lock in some oil and gas needs? I
think you could. I think 55 has held this sell off. It'll bounce up a little bit, then it'll go back down, and maybe it just goes to 54. But I think it'll go below this low that we've spiked to this here in this month. What should we do? If we're looking at locking in heating oil, diesel fuel, and all that. I think we've got an opportunity to sit back and wait a little bit. But here's always the problem. Number one, seasonally, the market doesn't turn until mid-February. But for tax reasons, a lot of farmers want to get it on before the end of the year. So I think we can at least ride through this downturn, give it another few weeks before we, and the end of the year starting to approach. And then if we have to do it for tax reasons, that should still give us a better opportunity to get something locked in.
All right. Darin Newsom, thank you so much.
Well, thank you, Delaney.
Join us again next week when we'll explore how new research on healthier oil seeds, and Elaine Cubb will join me at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.